All right. Hey, everyone. I'm here today with Matt Paulson, founder of MarketBeat, which, just in case you don't know, they've got what, 20 million monthly page views?
Yeah,
Like,
not quite that anymore. We're probably closer
no,
to 10 to 15. We peaked at 20 during the GameStop AMC craze, but haven't hit that in a while.
that was amazing period of time. I
Yes, it
got to
was.
say,
We all made lots of money.
but you've still got, we did. It was like uh, boom times. But um, you've got like what, several million email subscribers.
Mhm.
You've been ranked in the Inc. 5000 7 years running. Is that right?
Yep, 7 years running. We have 3.1 million email subscribers. Our kind of 30-day active number is about 1.4 million. We have over 100,000 SMS subscribers, about 700,000 people that have opted into browser notifications. So lots of people subscribing in a lot of different ways.
That's awesome. And I have to say, so I did a conversation with Charles Flagel and Kenny
Hmm.
Shea, and Flagel was like, I look to MarketWise and Legacy and those guys for like what are the thematic stuff, but
Hmm.
when he thinks about technical marketing, he's like MarketBeat is pretty much where I always go. Like you guys are at the top of the list of like what's working in his mind, and I've heard that from a
Thanks.
lot of people actually. And just to illustrate that, I want to walk people through what I think is possibly the longest lead offer stack that I've seen. I
Hmm.
went to opt in on your homepage, and the opt in process starts like you would expect with a um, here's an opt in box with a an offer. Then it goes to a coverage page.
Hmm.
You skip that, it goes to a second coverage page. You skip that, it goes to a different type of coverage page for free investing guides.
Hmm.
Then you go past that and you get an SMS opt in page that then goes to a text ad page. And now we're on like step 7, where you
Yep.
get to like a thank you page, which has an offer for a 30-day free trial, right? And on that free trial, of course, you have two offers: the annual versus the monthly.
Hmm.
I'm assuming I didn't buy. I'm sorry, but I'm assuming there's upsells behind that. But before we get to
Yep.
that, um, there's an exit pop when I close it for it was an SMS, and then because I didn't subscribe, I got an abandoned cart email from you very
Hmm.
quickly. So I think that's like 12 or 13 steps all in, and I'm assuming
Hmm.
again there's upsells. Um, so like it's safe to say that you're going after opt-in and that you think email is important.
Yep. I mean, we think of ourselves as a kind of a media lead gen company.
Yeah.
We are never going to be kind of the top of the subscription sales list because that's just not the business we're in. But we're in the business of attention and monetizing that attention, and I think we do that very well. You've done a good job of explaining your funnel. One kind of caveat to it is not everyone will get the same experience.
Mm-hmm.
So one thing I recognized a while ago was that depending on the day or the week, like one co-ed unit might perform better than others. So we kind of sort them dynamically by performance. So like you might see our internal co-ed unit one day, but like on page one, but a week later you might see investing media solutions or after offers because their co-ed units have been performing better because they've got the advertiser inventory. So it does change frequently, and it does change kind of all dynamically and with software.
That's interesting. I mean, just that's interesting. So you're working with a lot of different people then,
Mm-hmm.
who are also in the advertising business, and so you're
Mm-hmm.
you're kind of aggregating attention then in advertising from across the industry. Is that right?
Mm-hmm. Yeah, and when you have just the volume of opt-ins we do, it would be tough for any kind of one provider, even us, like to really generate the advertising demand for all of them because we get tens of thousands of opt-ins a month, and not everybody can handle that volume.
Yeah, and I mean that is, I mean you do have an enormous amount of volume in the space, and it's interesting to me because when I go through your site, you do also do a really good job of keeping everybody on the site. Like I've seen other sites where people, if you have a stock ticker, as a link, you're clicking to somebody somewhere else to look it up. But I mean, everything's internal to the site, right?
Mm-hmm.
And so you're getting a ton of page views, and then on every page, you're obviously, like you said, you're in the media business, and so again, you have a ton of ads, you have tons of places, not like intrusive, but like they're just ever present.
Mm-hmm.
Um, I noticed on one page, I think on the how-to page, you had check boxes for opt-in, for like 11 different letters, and you're
Mm-hmm.
just like very very um, I would say like reading is like just very disciplined
Hmm.
about getting the opt-in on everything. Um, which I think on the subscription publishing side, we don't always have that same discipline.
Hmm.
Um, it's almost like the website is treated because most of it's email and external advertising marketing. I
Yep.
feel like there's a lot of missed. It just doesn't get the attention. But
Yeah,
the
well, like when you're a lot of your, if you're primarily generating email signups through paid subscription kind of stuff or Google AdWords, you care about your landing pages and what happens after that. You're not as concerned kind of about your main website. So I think, people spend a lot of time in their funnels, but then they don't spend a lot of time on the rest of their website.
yeah, yeah, and with you, so you have from what I understand, you have a very strong organic
Mhm.
presence, right? So you're getting all this because you've really put the effort into organic
Yeah.
in ways that most like the subscription publisher tends not to.
Mhm.
Um, with that, like, what does that look like then as a business? Because I know you have from our previous conversations, you have a really robust dev team.
Mhm.
And so how do you when you're thinking about just building your own traffic, I mean, what does that look like just in terms of like a general like structure of the business? Like how many
Yeah.
people are focused on that piece? And then how does the content team approach like thinking about that? And
Mhm. Yeah, I mean, we don't do a lot of kind of paid editorial content. So our content team is really focused on kind of the front end content on a website. So that means keyword research, creating pages to match those keywords, and really good pages too. Like one thing we're doing now is like we're launching a bunch of new like investment calculators. So we might have a calculator tool, but then there's like a couple thousand word article with it, and then we SEO optimize it. And like one of our best keywords is dividend calculator or dividend yield calculator. So we're trying to build out a bunch of calculator pages that we write the code for, and then we write content with it, and we found pretty good success ranking with those. For us, we've got a good domain, our domain authority is like 73. So if
mm-hmm.
we can build a kind of a relevant page or tool that we know people are searching for, we've been able to rank for new stuff pretty consistently.
That's interesting. And just that kind of phrase, like dividend yield calculator. I mean, the intent on that is obviously like you have to be an investor to
Mhm.
even understand that and to think about that. And so that's an interesting like because I think I've seen a lot of like sites that went after organic and their approach was to go pure consumer finance
Mhm.
and not necessarily investor finance. And so then the quality of traffic for our space tended to be lower, but
Mhm.
you're doing it in a way that is much more focused on the intent for investors. It sounds like.
Yeah, we don't try to focus on any kind of the personal finance keywords. It's strictly kind of stock tickers, stock news, and then kind of some of the list of stocks. Like say you want to see the list of dividend aristocrats or dividend achievers. We have those pages built out and we rank pretty well for them.
Nice, nice, and like the the one area that I was surprised I didn't get an opt in
Mhm.
was when I went to look at your media kit. Um, and so it was like that
Yeah.
was the one place that you were just like, here it is.
Those people know how to get a hold of us.
Yeah. And so uh email, like I'd love to talk to you more about the because I mean,
Mhm.
for anyone who doesn't know, Matt, also you've also written a book called Email Marketing. That's been reprinted many times at this point,
Yeah, it's
sounds
called
like.
Email Marketing Demystified. Just published the third edition a couple months ago. And, it really is kind of the 101 for email marketing, but I think there are definitely tips in there that people in our industry would uh, really benefit from.
Yeah, and it's one that you've got like a ton of 5-star reviews, and but I will say that my favorite review is the single 1-star review.
Yes.
And the reason for that is it's obviously somebody who's like maybe a corporate marketer, maybe somebody who's like thought about marketing, and like you just read the whole thing, and it's like, okay, this is almost the best endorsement for anyone who knows marketing.
Mm-hmm. Yeah, so I don't know. It was accusing me of like recommending illegal things like 3 or 4 times.
Yeah,
It
and I
was
was like,
great.
that's not illegal. That's not illegal. That's
Yeah.
not like it's just but it is like so the question of like the state of email marketing
Mhm.
I think you're obviously one of the perfect people to ask about this. We've had all these people who over the years have talked about like the death of email marketing, and
Mhm.
we know that's kind of nonsense in a lot of ways, but it has gotten different. It's
Yeah,
changed.
especially in the last few years with the privacy stuff. It's really changed the game.
Yeah. So how would you describe like kind of how the game has changed and kind of where you
Mhm.
think the the area of like success is, that from a focus perspective, like where should people be
Mhm.
looking at, and what are some of the old kind of like rules of thumb that maybe don't apply anymore?
Mhm. Yeah, the thing that's really gotten difficult, actually, there are two things. One, there's kind of all the privacy regulations in terms of the CCPA with California and the GDPR in Europe, and what you have to collect with an opt-in. The bar has gotten higher in terms of like, you really want to store their IP address and their location, and have kind of the right disclaimer language to say, yes, I'm actually opting in. I do want your emails, and I don't know, collect enough information so that you can prove it was them. Because even if you have their IP address, it's hard to prove it was them. So you really want them to type in their name and their email if you can, especially when it comes to like SMS opt-in stuff. There's a lot of litigation around that. So you really need to prove that, John actually opted in to get SMS alerts, and, that's,
Mhm.
become, challenging. The other side is just tracking the data. Apple really kind of threw a bomb in everybody's email marketing plan by blocking open data. So you can't really accurately tell when somebody opens an email on an Apple device anymore, or using the Apple Mail app, because it
Mhm.
marks basically every email as open. So what most ESPs have
Yeah.
done is they just say, okay, those aren't real. We're going to block that data, which you can do. But then it's basically like the people that have Apple Mail are never opening your email. And then you think, oh, this person's inactive, they're not opening my email. And then your active segment, becomes much smaller. So we've really had to learn how to work around that. And I think we've done it pretty well. And really the way you do that is you kind of think of like all of your points of life, signs of life on your subscribers. So if they come to your website and they're logged in, you update their kind of last active date, or maybe they, click on a browser notification, or they tap on an SMS ad, you update their last active date.
Mhm.
Or if you can confirm a view that's not, an automated view, you update there. If they click, obviously, then you update their last active date. So the data collection's gotten harder, but at the same time, like, yeah, the other thing is like bot traffic has just gotten awful in the last few years. We
Mhm.
think we finally found a solution, and be happy to talk about it in detail at some point. But we use Cloudflare to really kind of keep a lid on that, and we're really happy with kind of how that's worked out.
But yeah, that does seem to be the thing. Is it's kind of like, are you then cleaning off actual readers versus people who are not? And so, um, where do you think like I mean, the reason everyone who was saying that email is dead is email. The basic thesis of that is that social channels are taking everything, that chat is taking over, SMS is taking over, that younger people are not using email as a communication tool. And but my thought on that is that, among other things, one, everyone I know who has a social audience as their primary business, they're one of their big that actually sells things, that doesn't just sell advertising on their social channels. The ones who actually sell things, their primary move is still to get them into an email address or into an email list. Um, and the thing with the like, there's been
Yeah.
moves to things like Slack communities, but like once somebody goes professional, and like the intercompany communication is still not. It's still email. It's still kind of this technology. How do you think about that, and where do you think we are in the cycle?
Well, I kind of think about it as building audience on channels you own versus channels that you rent.
Mhm.
Facebook and Twitter, they all control your communication with your audience. With email and with SMS and browser notifications to some extent, that's really kind of a one-to-one thing where, let's say MailChimp kicks you off, you still got all your email addresses to the people that opted in, so you can sign up
Mhm.
somewhere else and, email them again. And I've just seen too many people build kind of an audience on somebody else's platform, and then the platform's priorities change, and then your business just disappears. Like none of us are playing Farmville anymore because Facebook decided they didn't want Facebook apps from third parties.
Right.
Um, So like, I don't want to get stuck in a situation where there's my ability to communicate with my audience is determined by some big tech company. I
Mhm.
kind of learned that lesson by being too SEO focused early on, and
Oh yeah.
just decided like, nah, not going to do that again. So email, SMS, that kind of stuff, where it's doesn't matter who the provider is, I can still communicate with the audience.
Right. So even with your big focus on organic, it's still like get them into the email,
Mhm. Yes.
because you can get slapped at any point.
Hmm.
Um, like what other kind of areas when it comes to like the advertising cycle that we're in right now, and it's one of those weird spots where we see attention is still there,
Hmm.
conversion is difficult, we're seeing bright
Hmm.
spots. But what do you think that people should be thinking about in terms of like what are you seeing working out there right
Yeah.
now?
I mean, the new offer that we've had a lot of luck with is Porter Stansberry's kind of new Porter and Company brand.
Hmm.
He's kind of had the I'm coming out of retirement pitch. He's selling a product for, I think $1,000 or something like that. And we've had really good luck with that. We continue to have good luck with Legacy and Stansberry stuff month after month. We've had good luck with IR advertising, but that volume's been down lately.
Hmm.
It's about 20% of our advertising business. So we really want to try to run everything, and then we'll prioritize just the stuff that does the best.
Yeah. Yeah, no, it's interesting that I see that right now in this market, like the Legacy, Stansberry, Porter,
Mm-hmm.
those promos, those are like even the thematics tend to move right now towards like resources and
Mm-hmm.
energy and you know not like heavy trading stuff right now. We haven't
But
seen. Go ahead.
do you think that's kind of because energy is top of mind with the problems that Europe is having, or what do you think is driving that?
I do. I think that's a big part of it. I think that Matt Werder and I have done a couple of conversations about kind of the macro environment and keyword research and how those things start to predict. And he did his first one for us back in the 2021 FMS, and
Mm-hmm.
he's been pretty spot on about thematics that will be converting about 6 months out if you
Mm-hmm.
use kind of that the model that he's been using,
Mm-hmm.
and he's stayed pretty consistent on that. And um, the the definitely the news cycle um has because like the actual events are impacting markets.
Mm-hmm.
I think that definitely the top of mind piece is huge, but it's there because it's real
Mm-hmm.
in the market. And I think that the news cycle, and this is I sometimes I get worried that I tend to push my view sometimes in these conversations more than um I should, but like
Mm-hmm.
I think that in the previous like pre-COVID period, we had these big thematics like crypto and 5G, and like
Mm-hmm.
everything stayed in those things. And then if it wasn't that, then it was a trading promo, right? And it was like
Mm-hmm.
X 1,000% gains. And that kind of stuff isn't working right now. Then the
Mm-hmm.
regulatory environment changed, and so kind of figuring out like, well, what's going to convert in this environment. Um, Topical news stuff um, that is focused on like there's a lot to say about energy and about
Mm-hmm.
resources right now.
Yeah.
I'd love to get a
I
few other copywriters on that. Sorry, go ahead.
I agree. Yeah, I feel like the active trading stuff is really hard now with the regulatory environment, and it's very difficult to say you've had X% gains over this period of time, because even if it's 100% true, the FTC or will take issue with that. So it's tough to come up with compelling story for those trading promos, from what I've seen. And it really is kind of the topical stuff that seems to be working, of like what is in the news cycle, what is everyone talking about. The thing that I'm kind of surprised there isn't a big promo around is really inflation. Like, I have yet to find like the big inflation promo that is really driving attention and sales. I'm surprised that doesn't exist.
I'm with you on that one. Um, it's interesting to see like what I see people testing too, because um, it does feel like there's a lot of like tests that are going out that I mean we I mean we've seen this. Like I said, there
Mm-hmm.
tends to be a channel of thematics that are just working.
Mm-hmm.
And so if you're not testing in that channel, then I think your chances of success are much lower. And so like,
Mhm.
I mean, inflation and like there's so much story there too, like around inflation, both from a topical side and from an
Mhm.
investing side to talk about that.
Mhm.
Uh, I think there might have been one I could be wrong, but I think I remember there was a Bonner promo earlier in the year that worked really well that kind of played off that story. But um, yeah, I haven't seen nearly as much of that
Mhm.
storyline. Um, do you ever notice that like with because you have that big search component that you can start to see kind of like pockets of increased traffic that then correlate to promos that thematics that might work or not, or is that too disconnected to really
Mhm.
um, predict at all?
We haven't really seen that as much. Our top keywords tend to be pretty consistent. The only time that really got shaken up was when the GameStop AMC stuff was happening. Like those keywords just totally blew up because we ranked for like GameStop short interest and AMC short interest, and like it was
So you,
it was very clear what people were googling that those couple months.
yeah.
But in general, like if energy, like somebody start, the energy stock volume, it's just there's not enough of it really to show that trend.
Hmm. Yeah. Now, so like I wanted to like I love I actually like you're one of the people on social that I actually love kind of following. You post a lot of really cool stuff, and interesting thought provoking stuff. And one of the things that you posted recently I thought was really cool just because um, it's so true. The issue of like leverage
Mhm,
in business and how you use leverage.
mhm.
Do you want to walk through like your view on what leverage is in like as an entrepreneur and how to think about that? Because
Are we talking about, I'm trying to think what post we're talking about. Are we talking about kind of financial leverage or business leverage
now
or?
you were talking about let me see if I have it here. It was um you said that this was a great line. Unless you're a trust fund kid, you've got to outwork most other people in the world. We all know
Mhm.
that, but you also have to work on things that compound and generate leverage,
Yes.
right? And you had things like other people's capital, other
Mhm.
people's labor, technology, um, and just kind of thinking that through as like a basic operating principle. Um,
Yeah. Because I mean, we all know people in our lives that work 60, 70 hours a week. But if you're working 67 hours a week in a restaurant or doing construction, like you're not going to get anywhere because there's no leverage there. You need, multiple things that play off each other to drive big business results. And, especially things that compound over time.
mhm.
Like I know if I buy some real estate today, that's going to, generate wealth every year as we pay down debt and there's appreciation and cash flow, and that stuff will snowball and grow over time. But I think it's true in business, as well with your technology and your systems, and you get better at copywriting and you get better at conversion optimizations. All these kind of things are along the sales funnel. If you get better at them, they do compound and add up.
Yeah, and um, with that, like one of the new technologies that I mean, everyone's talking about the AI stuff and the Chat
Mhm.
GPT and all that kind of thing right now.
Mhm.
Um, because you're such a tech focused marketer, have you looked at, have you dug into that and kind of what are you thinking about? Like, there's a lot of cool stuff. There's a lot of overblown stuff. There's a lot of interesting kind of angles that I've seen people take on it.
Mhm.
Have you looked at that much at this point?
Yeah, I've been playing with Chat GPT. I've asked it like some investing questions, and the answers are frankly pretty good. Is it? I think what somebody could do if they wanted to is, let's say you wanted to write a long form essay on a topic. Let's say it's dividend investing. You could have somebody come up with kind of the content brief of like, here's all the headings, but then you could
Hmm.
have Chat GPT kind of write the individual sections and then have somebody edit it afterwards. So like,
Right.
what is a dividend yield? What is a dividend payout ratio? And let Chat GPT write each of those sections, have somebody edit it. And honestly, like if Google ever figured out a way to like figure out that was automated content, I would be very, very surprised because it's frankly, it's good. It's good, as good as like the person you're going to pay $100 to write that article is.
Right.
So we're definitely entering a new era of content. Chat GPT is really, I think, the first example of something
Hmm.
that's, at least in certain topic areas, as good as something a human would write on, very kind of clear and concise, you know, what is XYZ kind of topic. It's really good.
Yeah, no, I think we're going to see a lot of copywriters using it too to speed up their production.
Mhm,
Especially the ones who, I mean, from a research perspective, like, and you could use ChatGPT to pull a lot of research together really
mhm.
fast.
Yeah, we try to use GPT for images in our articles. So we would not ever like get hit up by somebody saying, "Oh, that's my image. You should show me, prove to me that you licensed it, or you owe me a bunch of money." And I figured, well, if we have automated images, that'll never be a problem. But turns out the images just aren't good enough yet. So we are we pulled back from that.
Yeah, yeah, no, it's that, but it's. I mean, it's everyone's talking about it for a reason. It's definitely like kind of
Mhm,
a cool functionality all of a sudden that seems
mhm,
to be like, oh, over the next 5 years, this is going to be really amazing if it
mhm,
keeps developing.
mhm,
Um, and going back to like some of the stuff that you talk about on leverage and things like that, like one of the things that I think is really interesting too about what I see you're doing is
mhm,
you're actually involved in a lot of things outside of MarketBeat
mhm,
that are really cool. Like you guys raised a $17 million VC fund, right?
mhm.
And that's part of Startup Sioux Falls. Was that it?
No, that's actually a
A
separate
separate
thing.
thing? That's entirely separate.
Yeah, so I launched a venture capital fund with my friend Tim. He's kind of the operating partner day to day of it.
Hmm.
He takes a salary from it. I take a small salary. But we wanted to raise some money to invest in tech companies in our region. I've got kind of the credibility between my business and the entrepreneurial ecosystem stuff I've done. So we thought if there's going to be a next generation VC firm in kind of our region, we had a pretty good chance to do it based off
Hmm.
just our experience and our relationships and my credibility. So we launched that earlier, about a year ago. We've invested in 3 deals so far. Have a fourth kind of on deck,
Hmm.
and we're going to see if we can turn it into. We have had a couple other kind of private equity firms in South Dakota um, be in a situation where the founders have aged out and there's not really a next generation of leadership to replace them. So I thought, what if we could launch a fund and I could get a reliable enough of a partner to kind of run it day to day, and that could be a great, I don't say, side business for me over the
Hmm.
years. And it's something that it's very hard for anyone else to do because you need the credibility and you need to
Hmm.
understand venture capital. So it's a very kind of high moat kind of thing.
Right.
And we did fund one. We're gonna keep doing it, and we'll see what the demand for a fund two looks like if we do well. And I think there is an opportunity to be a firm that's got $1 billion under management over the
Hmm.
next 10-20 years if we play our cards right.
What do you mean when you say next gen VC fund?
Well, I mean, there was kind of, South Dakota is a small state, we have about 1 million people that live here. There's, a handful of private equity funds in the state, like less than five.
Hmm.
So it's not super competitive.
Right.
And then of the ones that are there, a lot of them are the people that run them are in their 60s and 70s, getting ready to retire, and there's not necessarily a next generation of leadership just ready to take over. So we're very friendly with the people that are in our industry, and said, well, if nobody's stepping in here, maybe that's an opportunity.
That is a vastly better version of the story that I see a lot of the there's like this whole new class of like influencers and marketing channels that are talking about like buying businesses,
Mhm,
and they're all talking about like laundromats and things like that, and but you're talking about the same basic storyline of like, hey, you have people retiring and want to take over the business, but you're
mhm,
talking about it in terms of PE funds. If you like, that's a vastly, again, when you go back to leverage, now you're talking about like,
mhm,
even if you could step into
mhm.
an existing firm like that and
Yeah,
get a book of business, and that
and we
that's
do think
that's
there's probably going to be an opportunity to like take over the management of some existing kind of funds
hmm.
where the organization that maybe set up the funds is ready to not do it anymore, and
Hmm.
they don't really care about the money. So there's a chance we might be able to do that. Fingers crossed, which would be a
Wow.
real win for us.
Yeah, that would be. I think that the intersection of kind of like what we do too in venture in general is a growing area,
Mhm.
because we see like venture popping up across one. I mean, you see it in BizOp, right? Like,
Yeah.
which is kind of funny. Like you're seeing like, start a fund, it's get rich, and it's like as a business opportunity kind of thing.
Mhm.
Versus, but you're also seeing people with real distribution, real channels who are adding a fund in order to acquire things or do things within like kind of the vertical that they operate in.
Mhm.
And so I do think that that's going to be an area that we're going to see a little bit more
Mhm.
of. I think you'll see a lot of problems with it, but then I think there'll be
Yeah.
people who really do really well with it. So
Yeah. Well, my grand vision, and I honestly don't know if we're going to be able to pull it off yet or not, but if I can prove that we've got a track record and can, really show that we can make money with it, and the regular, we get the right attorneys, there's a situation where we could raise, a $50 million fund primarily from MarketBeat subscribers
mhm.
and execute the same strategy and, really become, intersect kind of the audience that we have now. The first fund was made entirely of local investors, so we could kind of be in the right regulatory, I don't know, category that we wanted to be.
Mhm.
But we know the market audience is there, and there's an opportunity there. And if we can show that we're generating 15-20% IRR on our money, and that's going to be a big opportunity someday.
I agree. I agree. I mean, I'm always interested in, the Motley Fool raised, I think it was $100 million or 150 their first
Mhm.
round, and then they did another round uh, from largely
Mhm.
from their subscribers, and then they were looking at like um, raising, more institutional, and that's a much more difficult
Yeah.
proposition. But the ability to leverage the attention that you've already got
Mhm.
into things like that is definitely, I think, one of those areas that you've got to be a very entrepreneurial person to be
Mhm.
willing to do something like that. And it's one thing to raise the money, and it's another thing to actually like have the
Invest
VC
it. Yeah.
experience and invest it well.
It's
And
a
so
lot of
you're
work. Like I was just surprised, like how many different meetings we have to take to find a deal we want to do. It's a job. Like
is
it's
it
it's
more
not
than a
some.
hundred? Is it more than 100 to 1 for you, or is
No,
it
it's
like nothing?
well, I mean, out of every 100 deals we look at, one of them we probably write a check to,
Yeah,
but we don't take meetings with all of them. So
right.
there's a lot of filtering that happens before we'll ask for a deck and we'll look at it and kind of scope them out on LinkedIn. Like, who are these people? What have they done before?
Hmm.
And if it's a 21-year-old just out of college who hasn't done anything yet, we don't take that meeting.
Yeah, yeah. It's funny. Like I've talked to a lot of guys now and done business with a lot of guys who fund deals, who whether it's pipes, whether it's VC,
Mhm.
some studios, and the thing that like that everyone who's successful at this is like the capital's there. It's not finding capital that's a
Mhm.
problem. The competition anymore is it used to be people trying to compete to get money, but it's like we're competing for good deals. It's hard to
Yeah.
find like well constructed, well thought out
Mhm.
companies, founders who have some experience that can to do things. And so the
Mhm.
the the yeah, finding companies is very difficult.
Yeah, that is definitely the hard part because there's a lot of people that want to take your money and start a company, but most of them aren't ready to take $1 million or $2 million check.
Right. Yeah. And then but it's but you're very involved in venture though. So not only have you raised the
Mhm.
fund and you're doing this, then like you're also you're very involved in startup Sioux Falls, which I see you have a
Mhm.
shirt on for. So
Yeah,
it's um
I am on paper. I'm the founder of it actually.
are you?
Yeah, so our Chamber of Commerce, like 15, 20 years ago, launched a big technology incubator space called the South Dakota Technology Business Center. And it never really worked. And in 2017, I got recruited to be on their board. And clearly it wasn't working. So I had lots of suggestions on stuff to try. And,
Hmm.
there wasn't a lot of appetite to try all the suggestions. So I told them, hey, I'm going to start this online community of entrepreneurs and we'll send customers your way. I'm doing it whether you want me to or not. So you can kick me off or not. And they didn't really know what to do. But I built a community, like online community of about 7,000 local business owners and started doing events around it. And I kind of persuaded everyone in our chamber development foundation world, like, oh yeah, this is what we need to do. And at that point I was like, okay, here you go, you guys can run it now and take it over and
Hmm.
have the brand name. And we're building a new building for it downtown right now. We took an old 6,000 square foot brick building, gutted it. We're building a cool co-working event space in there, and
Cool.
that'll launch in a couple months. So
Wow, that's awesome.
yeah,
That's very cool.
so, sometimes you got to go off the rails and do your own thing a little bit to persuade everyone else that the right idea is the right idea, and that is what happened.
I know that's I think that's I don't know if you have this like I do a lot of other things.
Hmm.
I talk about, I'm in the event business here, but like,
Hmm.
um, there's just some things that like I get these ideas and then like I literally just have to do this thing, not because I want to
Hmm.
do it long term, but like if I don't get this out of my system, it's gonna
Yep.
bother me forever. And
Hmm.
so like I'll go start something that might be a business, it might be a something else. Um, and you know, I've done this before where I get something up and it's like, oh, we got like 2 million in revenue in it's like 4 months. I don't really want to do this business,
Hmm.
but I had to get this out of my system
Yep.
because it would just drive me nuts and I would regret not doing it.
Yeah. When I started Startups Who Follows, I told everyone like I don't want to run a nonprofit. That it's not me. I am an entrepreneur. I run businesses that make money, but I'm going to do this because it's somebody needs to do it. And then yeah, I finally like handed it over to the nonprofit people. About a year and a half into it, and they run it now and do a pretty good job.
That's awesome though. I
Hmm.
mean, I do think that you're like I really do believe that this intersection of like FinPub and media and venture is going to
Hmm.
be like it in my frame is in business cycles, and
Hmm.
so I think of like 2008 to now basically to post COVID as kind of one massive cycle.
Yeah.
um and I think that this next cycle, I think that the VC piece and where it's kind of coming up, I think that's going to be one of the main stories over the next
Yeah.
like 5 to 7 years, 10 years.
Do you think the kind of main issue with it right now is the deal quality on kind of the reggae stuff that we all get asked to promote is maybe not quite there yet? Like I feel like the
I,
best deals don't make it into the reggae space where they're emailing lists like MarketBeat and saying, "Hey, we'd love for you to invest in this." I haven't like seen just a deal come through there
Mhm.
that like I'd want to invest in yet.
I do. I think that's it. So I think that the reggae stuff is so new
Hmm.
that it still like hasn't like percolated through all of the various like founder communities. I
Hmm.
also think it's more difficult than just like getting a couple of meetings, right?
Hmm.
It takes a more sophisticated like approach to be able to make it work. Like you need a publisher or a marketing team to make the reggae, because
Hmm.
it's like crowdfunding but scaled up.
Hmm.
And so it's a harder raise, and so it's not as much for a startup as it is for a later stage
Hmm.
company. And I've talked to guys who were like, oh, we're spending $10,000 a day to raise on Facebook. This was during COVID. Boom. And I'm like, wow, like that's crazy
Well,
to me.
hmm.
And so I with that, I think that like the venture side though isn't just the reggae piece.
Hmm.
I
Yeah,
actually,
there's.
yeah, go
Go
ahead.
ahead. Well, I kind of feel like the stuff that is the most interesting right now is kind of the Rake CF stuff that is on like Republic and some of those
Mhm.
services where it really is kind of the individual founder that's seed stage looking to raise money, a couple $1 million, where there are some interesting deals on there that I've seen. I've invested in a couple of them. Um, but it's almost like with the reggae stuff, there's more sophistication there, but it's almost if you're a hot startup and you're doing well and you're early, like you don't need that sophistication. It's like
Mhm.
that sophistication of fundraising with the reggae stuff happens because the traditional venture stuff isn't happening.
Right. No, and so when I think of the VC piece,
Hmm.
I think of it actually as like the deal origination side, going to media. Like we see this, like Jason Calcon is a great kind of early guy in this, and that he has his founders university, but it's very general, right?
Hmm.
But you could do something very similar with a very like
Hmm.
tightly niche focused um sector. Let's
Hmm.
you know what I mean, and do a really good job
Hmm.
of building a digital pipeline,
Hmm.
um, in a tightly focused sector,
Hmm.
to get a lot of the deal flow in an area in front of you. And I
Yeah.
think that deal origination side, and this is also in like the broker dealers. Like I talked to a lot of broker dealers, and it's like this is going to be like kind of where a lot of their work's going to have to go. I think,
Hmm.
like that piece. I think it's largely unexploited.
Hmm.
I think that because it's unexploited, like the people who a lot of VCs don't have like the kind of experience and expertise that you have. Like
Hmm.
the idea of building out um, uh, founder traffic online, uh, doesn't really like they don't really get that. But then you see, the guys at Y Combinator have like they're producing a lot of media,
Hmm.
um, and they're doing a lot of things that are not just helping the founders, but they're actually, as they help them, they're illuminating all the reasons why you want to apply
Hmm.
to Y Combinator.
Yeah, it is really interesting how that space has really understood the need for media, and even some kind of public tech companies.
Mhm.
HubSpot is a great example, acquiring, like the My First Million podcast and the Hustle.
Mhm.
You see that more and more. So I think Stripe, was it Stripe, just acquired this independent, startup media brand called Indie Hackers.
Oh, did they?
Yeah, so it's like you see more and more of that.
Mhm.
And people feel like it's easier to acquire the media company versus buying the media, which is a really interesting trend.
Yeah, and I think it's like, as like when I think of FinPub and financial media,
Hmm.
the tendency, especially like once you for the larger companies, is it's kind of to stay down this track.
Hmm.
And I think that the most interesting opportunities right now are for people who are for like the people who have companies that are still like founder run, because it's that
Hmm.
entrepreneurial thing where like you can see an opportunity and pivot or take a shot at something a little bit different, because
Hmm.
I think that there's gonna be a lot. I mean, this is just like the VC piece, like venture in general has done a better job of marketing itself
Hmm.
over the last 20 years than any other aspect of capital. I mean,
Hmm.
um, it's just done as a sector has done an
Yeah.
amazing job. Um, and I think we're going to see a ton more um, of the kind of influencer VCs
Hmm.
popping up. But then next to influencer VCs, there's like, well, who's going to actually have like the publishing strategy
Hmm.
to convert that attention into something that's much more substantial.
Hmm.
um and so I think that area is, for me, it's one of the it's fascinating, because there are so many ways to go after tech companies, if you were, of any sector, right? There's
Hmm.
um the university programs. You can go, like, I know guys who've gotten technology startups that they went to Lincoln Labs at MIT, and they're
Hmm.
just going to their events and licensing their stuff, and it's like, well, you can target all those folks. um, and so and there's tons of, the university programs all over the place have some very interesting things and a lot of junk. I mean, everything
Yeah.
in startup world is kind of like, one of my favorite Zen sayings is like, you know someone asks how's Zen in the South, and he's like, oh, it's snakes and dragons all mixed together. It's like amazing stuff with
Hmm.
garbage all mixed together. But they're reachable, and
Hmm.
everybody's
There's
engageable online.
a ton of opportunity there, no doubt. I think
Yeah.
the secret, at least on the VC side, is really, filtering the snakes and the dragons, and it's a very messy thing to do, because
Mhm.
like there's no way to just to avoid taking a ton of meetings and like testing out products. Like, does this really work? Does it do what they say they're going to do? And I think that's why the rub is still kind of there.
Yeah. Yeah, and I mean, I think we'll see a lot of people who get the marketing side down,
Hmm.
and there are just abject failures at the actual investing side,
Hmm.
as well. But it's going to be interesting. It's going to be
Hmm.
interesting, and I'm pretty sure I'm going to expect to see. I'm going to be like, okay, well, Matt Paulson's posting about his, now he's at 500 million, and he has a startup university that's targeting
Yes.
all these things online, and then
All
they're
of,
also selling media. And
all of a sudden, there's a FinPub University, and
there should be. I've thought about that. I've actually thought,
yeah.
I've been talking to Ian Rosen quite a bit, and some other
Hmm.
people about putting together kind of a startup studio for FinPub, because I think there's a
Hmm.
need for one, and there's some opportunities and a lot of interest right now.
Hmm.
I
But
had
there's
a
just, there's so many like people with skills that would work well in our industry, but also like businesses that are adjacent to financial publishing, and I'd put us in that bucket,
Mhm.
where like there are so many like smaller sites like MarketBeat that, I don't know, MarketWise or any, or Tiffin or any of the big kind of acquirers would just be super wise to like go out and just acquire a bunch of those sites that maybe get a couple 100,000 page views a month, and then brand them with kind of their publishing products. Like,
Mhm.
there's a lot of those sites out there, and they're very under monetized.
Yeah. even like Substack, I looked at the there was a post that Hamish, one of the founders, did about their numbers, and it was like they had um like over a million, what was it, well over a million paid subscribers
Hmm.
on Substack, but their total like revenue with the top 10 or whatever, it was like $25 million. And I was like, you think about like how much, if you had a million paid subscribers in FinPub,
Hmm.
um, you are an enormous business.
Yeah.
And so like how much latent back end opportunity was sitting there for those
Hmm.
publishers. And so even acquiring Substack newsletters, I think
Yeah.
is an area that you know
Yeah. Even if you
is
sold 1% of those people a $10,000 product, that's a big revenue source.
yeah, it's probably one of the most biggest untapped affiliate sources on the
Hmm.
in the industry
Yeah.
right
Kind of
now.
our more, I don't know, traditional view of acquiring email subscribers and, selling them products is feel like we haven't, as an industry, haven't really caught up to Substack and some of the newer places that people are building audiences. Like one thing we're going to do in Q1 of next year is really kind of just go after as many YouTube influencers as we can and say, okay, guy that has a dividend YouTube investing channel, love what you do. We want to pay you whenever you're going to demo a site. How about you demo MarketBeat and we'll pay you to do that. Just with all of them that we possibly can.
Nice. Yeah, that's a great idea. I think it's almost like the like how do you there's different strategies that people approach for how to deal with social. And what you're talking about is, I think, one of the smartest approaches that I've seen people execute on, which is you don't necessarily have to build the channel, but when
Mm-hmm.
someone's built the channel, especially when we know they're not monetized the way that they could be,
Mm-hmm.
going in and doing deals with them to access that audience.
Yeah.
Uh,
Yeah. I mean, it's amazing. A YouTuber is making $1.50 for every 1,000 views. Like, it's like you can pay you a lot more than that. We'd love to do it.
yeah, that's um, I don't know, like the social side of like building channels and stuff. Like I see like the trader educators who do it really well. Um, it's harder with investment newsletters. It's harder with more like investing focused
Mhm.
stuff. And then the people that I do see who have it, um, I how would I phrase this? The intent of the content that they use isn't super. I mean, investor focused. It's very like snarky newsy.
Yeah, you see a lot of that. Like if Graham Stevens' channel, it's a great example of that. It's always like, what did the Federal Reserve do today? What did the government do today? And that doesn't really play into the trader investor education space very well.
Yeah, and I wonder sometimes like who they're targeting, because they're talking about things that often a more professional investor is interested in, but they're not doing it in a way that engages them around an investment.
Mhm.
And
Yeah,
so it's
it
like,
seems like they're going more towards the, I don't know, people in their 20s and 30s, personal finance interest
mhm,
category versus kind of the more, I don't know, established investor that's in their later 30s and 40s and 50s and 60s that
mhm,
has real money to invest and wants to know how to do that well. It's you can kind of see it on some of the, like, you just go on YouTube and look at the people talking about dividend investing. You see their portfolio sizes. At most it's 100 grand, 200 grand. It's not the people that have been investing a very long time, and
mhm.
they all talk about their track records and their results, and they've been maybe doing it like 2 years.
Right.
So it's just a newer crowd to investing,
Mhm.
and I think it's good because teaching people to get put money away and invest early. All good things, right? It's a very kind of beginner audience.
Yeah. Yeah. Um, and then I think like it's always interesting to me too, because the time that I spent working with helping Real Vision, like in the early days before they went full crypto,
Mhm.
like they did a lot of things right. I mean, I know a lot of people joke about their model, and I've made some jokes in the past, but like to be fair, like especially their early content, they were engaging the professional community like
Mhm.
nobody else. I mean, they were getting, I mean, top tier asset managers paying attention, and they decided not to pursue that piece, and they went more towards crypto during the boom, and they had some success there and stuff. But it always sticks with me that the long form deep analysis really was able to engage family office managers, asset managers,
Mm-hmm.
get their attention, and that audience on a value like per eyeball basis is kind of remarkable. Like I'm doing a quick like kind of thing down in Jacksonville in January, and like one of the guys that I have coming down is he's an asset manager for they've got like 79 billion under management, and he targets certain groups, and he pays $10,000 CPAs if you can get a customer, and it's like that's a different level of uh, money target. You know what I mean? Like if you can still arbitrage the attention, there's a ton of money out there in
Yeah,
different segments.
if you can filter the right segments and identify who those people are, like, we're happy to get a $200 CPA any day of the week, right?
Yeah,
If you get a
yeah,
$10,000 CPA, it's just kind of unheard of in our industry. But
right.
you really have to know like who your people are and get them to provide information they don't normally
Yeah,
provide to even like identify, what's the 1% of your audience that meets that criteria.
right. And that's kind of what the I was like, come down and talk. I want to understand how you look at this,
Mm-hmm.
and why you're willing to pay, and who you're willing to pay for. So it should be interesting. But
Yeah, because
yeah, back to the just that idea that there's a ton of different audience segments that could be gone after with the media model too is something that I think is again overlooked. That the RA world, they subscribe to our lists. I mean, they're in the traffic. We don't
yeah.
select for them, but they're there.
Mm-hmm.
We know this from the buying side. You see the email addresses a lot of times. They're
Yeah.
coming from that audience is there, and it's more valuable than a retail investor if you know where to
Yeah.
look.
Yeah, it's really interesting if you can figure out the list of domains that like Wells Fargo Advisors is wfadvisors.com. So if you search for email lists, like how many of those people are on your list, and you can kind of identify who they are with a little bit of work, or like who's got a ubs.com email address, and you can it's really easy to identify some of those people.
Mm-hmm. Yeah, and I think that's the thing that it's one of my touchstones these days is I go all the way back to Carl Icahn and his famous tweets, right? With Apple when he raised the market cap like 17 billion. It was like a decade ago. And he didn't do that because of Reddit traders, right? It wasn't retail traders, it wasn't mom and pops. He's a guru, and he was tweeting, and the analyst community and the family office community and the asset management community were paying attention. And um, he had a massive capital per eyeball on his Twitter, and he moved. I mean, $17 billion with two tweets is, still remarkable.
Well, what's really interesting, I think, about the Carl Icahn Apple story is he kind of saw that the tech companies needed to shift away from growth towards value and like actually return some cash to their shareholders. Um, and convinced Apple to start doing a dividend, and now you see which tech company is doing fine now versus all of the other ones. Like Apple is like on a whole another level compared to the other companies, and I think it's because they did start to exercise some discipline and really just return do a dividend and pay off cash, and the market loves Apple right now because of it.
Yeah, no, for sure.
And now all the other tech companies are they're cutting R&D, they're doing layoffs, they're trying to get to a good profitability point where they can be generating free cash flow in the same way that Apple is.
Yeah, yeah. I mean, it's been a weird year for tech, obviously.
Mm-hmm.
And I think that's another reason why maybe the resource stuff works, because
Mm-hmm.
it's hard to make the tech case right now. And when all the topical news, you touched back on the earlier conversation,
Yeah.
all the
Yeah.
topical news is how bad tech companies are doing.
I just like to look at a graph of like, companies' historic PE ratios and like, oh, I could buy today at 2014 prices. That's really interesting. And people don't always realize that it's just, oh, the stock's down, I'm losing money. And it's like, well, wait a minute. Like, a year ago, would you have bought at 2014 prices? Yeah, probably.
Right. That's true. That's very true. Um, But cool, man. I don't want to take too much of your time today. I think I really appreciate you taking this time to do this. This was a great conversation, and like I really
Sure.
value your insights. It's
Yeah.
always cool to see what you're doing. Like it
Yeah,
really is.
absolutely. Well, and whenever you want to do one of these calls again, we should have a deep dive on some tech topics. I know we do a
Oh,
lot of interesting stuff there, and happy to talk about those sometime. Maybe we
well,
can do
that
it
would be
either at we can do it at FMS or on a call or whenever. I think that'd be
um
a really fun
that
topic.
that would be awesome. I would need you to give me the buckets of things that I should be asking you about, because I don't really have that kind of an understanding of like,
Mhm.
maybe that's just a quick thing if you want to run through like just a top line, like when you say like what kind of tech things that you're doing, like what are those buckets?
Oh, that's a good question. You know, the thing that's made us the tech thing that's made us the most money in the last year is triggered campaigns. So, you know, normally everybody you send an email to everybody every day. But if
Mm-hmm.
somebody clicks on your email, you send them another email, and they click on another one, you send them another email, and or you can also send them an SMS. You can put an ad on your website to them that pops up. You can send them a browser notification. So we built this
Mm.
really cool kind of offer queue of like, okay, John clicked on his first ad this month. We're going to send him this offer. Second thing he clicks on, he gets the next one. And we've developed all these really cool triggers where, like, if we know you're active, or like even, you know, maybe we set it so if you open an email, we're going to send you another email. Um, Lots of cool ways to identify, like, yes, this person is looking at financial content right now. We need to light them up. We need to send them content. And I mean, that's $150,000 a week in new revenue for us because we've implemented that really well.
$150,000 a week in new revenue
Yeah.
from the triggered campaigns. That's
Yeah.
amazing.
Mm-hmm.
Wow. Yeah, we should deep dive into that. um, I would love to take some time to deep dive into that with you.
Mm-hmm.
And that's, that just speaks to how much harder the game has gotten, I would say, in terms of, or sophisticated
Mm-hmm.
the marketing game has gotten, that you're able to even do that.
Mm-hmm.
Um, and if you're not able to do that, how much money is being left on the table?
I think every publishing company should be hiring a couple of developers because that's where the money is at, and optimizing is doing the optimizations that you can't just do with Active Campaign or MailChimp or Keep or whatever. Like,
Mm.
you got to get really granular on some things at volume. And if you can write the code to be very granular, that's really where the alpha is at.
How big is your dev team?
We have, I think there's 5 developers now,
Okay.
including me. I write code a little bit.
Oh, do you?
Yeah,
Nice.
love writing code.
Very cool. Wow. Okay. No, yeah, like that's so that, and then I know you mentioned earlier that the browser notifications has been a big kind of push for you too.
Mm-hmm.
Um,
Yeah, and that's coming back. Everybody thinks browser notifications is dead, but in 2023, Apple is going to launch it on iOS, and I am predicting right here that it's going to be the golden age of browser notifications. So if you
wow.
took it off your site, maybe think about turning it back on when Safari adds support for that.
All right, that's a big prediction. No,
Yes,
that's
that'll be my
interesting.
prediction for 2023. Push notifications are coming back in a big way.
Oh, that's cool. That's cool because they were great there for a while.
Mm-hmm.
Um,
Yeah, we did it in 2016. I think we were the first people to do it, and nobody wanted to buy them. So we like literally gave them away for free to the Motley Fool and a couple other advertisers for a month. And like, okay, if you generate sales, you got to come back next month. And then they all came back next month. So it was
uh,
great.
nice. You're like the corner drug dealer now.
Yes,
All that
first one's
traffic.
free. Yeah,
Oh, that's
sounds
killer.
good. Awesome. Well, good talking to
All
you,
right.
John, and we'll
You
talk
too.
more soon.
All right. Have a good one. Take care.
Mm.
Bye.